Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of corporate filings so you don't have to. Today, we're diving into a recent Form 8K filing by PMGC Holdings Incorporated. Now, this one's a bit like finding a $20 bill in your old jeans, except the $20 is actually just $52. But hey, money is money, right? Let's see what this filing is all about. This is a current report, which means PMGC Holdings had something important happen that they needed to tell the Securities and Exchange Commission, or SEC, about right away. The date of the report is March 7, 2025. PMGC Holdings Incorporated, based in Nevada, is the company we're looking at. Their main office is in Newport Beach, California. Just some basic background information for context. This filing indicates that PMGC Holdings is an emerging growth company. This means they're a smaller company with less stringent reporting requirements, which can be useful for attracting investors and can also mean a bit more risk. Here's the main event. On March 7, 2025, PMGC Holdings bought back some of its own shares from two existing shareholders. This is called a share repurchase, or buyback. It's when a company uses its own money to buy its shares back from investors. They bought back 32.5 shares, but it turned into 33 shares because of how the system works, and 38 shares from another shareholder. The price was about 72 cents per share. That's a total of about $52, which is a really small amount. The share buyback happened on March 7, 2025. PMGC Holdings was approached individually to buy back the shares by these investors, which means the investors wanted to sell their shares back to the company. The company may or may not decide to buy back more shares from investors in the future. If you want to see the exact details, you can check out the actual agreement. It's included as an exhibit in this filing. Now, let's talk about why a company might do a share buyback. One reason is to increase the value of the remaining shares. When a company buys back shares, there are fewer shares available on the market. If demand for the shares stays the same, the price per share can go up. It can also signal to investors that the company believes its shares are undervalued or worth more than what they're currently trading for. Sometimes, it's just a way to return cash to shareholders. In this case, the amount of money involved is quite small, only $52. It's unlikely to have a significant impact on the company's stock price or financials. The key here is probably the signal it sends to the market, however small. The actual legal document that details the share repurchase agreement is in this filing. Now, for my take on PMGC Holdings. This particular transaction is so small that it's hard to read too much into it from a financial perspective. It's more of a symbolic move. Perhaps the company wanted to show confidence, even on a very limited scale. Looking at PMGC's overall direction, it's crucial to consider what kind of industry they operate in. Without that context, it's hard to judge the effectiveness of this move. Share buybacks can be a good strategy if a company is stable and profitable, but they can also be a red flag if a company is struggling and using cash to prop up its stock price artificially. One potential risk for PMGC is that this small buyback might not have the intended effect. If investors don't see it as a sign of strength, it could be a wasted expense. On the other hand, if the company has a larger strategic plan that this repurchase fits into, it could be a worthwhile move. In conclusion, this particular filing doesn't tell us a huge amount about PMGC Holdings' overall financial health or future prospects. It's a small piece of the puzzle, and we'd need to look at other filings and information to get a more complete picture. The key takeaway here is that share buybacks can be complex, and it's important to understand the motivations behind them. Thanks for watching Corporate Decoder. If you found this breakdown helpful, please give us a like, leave a comment, and subscribe for more simple explanations of complicated corporate stuff. Until next time.